Right now, your bank is probably paying you almost nothing, while it sits on your cash and earns 5 times more with it. Same money, 5 times the interest, and the move takes about 10 minutes. Most people assume all savings accounts are basically the same. They are not. The gap between a lazy account and a sharp one is bigger than most pay rises. Let me show you the trick the banks would rather you never noticed. Picture your money sitting in a normal current account. It is asleep. It does nothing. Every month, it just sits there, and the bank loves it. Why? Because they take your sleeping money, lend it out, and keep the interest. You get the crumbs. Often, that is something like 0.1%. On £1,000, that is £1 a year. £1. You could find that down the back of the sofa. Now, here's the part that should annoy you. The same bank in another part of its own website might offer an account paying 5% or near it. Same money, same bank, £50 a year instead of £1. The only difference is which account you park the cash in. Nobody knocks on your door to tell you this. The good rates hide in plain sight behind a different name on a tab you never clicked. So why the huge gap? Banks make money on what they call lazy deposits. If you never move your cash, you are pure profit. They have no reason to pay you more because you are not asking. The moment you start shopping around, you become expensive to keep, and suddenly better rates appear. You hold the power here. You just have to use it. Let me give you the simple ladder of where money can live. First, the current account. This is your spending money. Keep enough here to pay your bills and not a penny more because it earns nothing. Second, an easy access savings account. This is your emergency fund, the cash you might need fast. Good ones pay far more than your current account and let you withdraw any day. Third, for money you will not touch for a while, a fixed rate account or an ISA. An ISA is a savings account where the interest is tax-free, which matters once your savings grow. The point is simple. Each pound should sit on the rung that pays it the most while still being there when you need it. Now the 10-minute move, log into your banking app. Find your savings rate. It is usually buried, so search the word interest or rate. If it starts with a 0 point something, you are being underpaid. Next, open a comparison site and look at the top easy access accounts. Pick a name you trust, one covered by the protection scheme. In the UK, that scheme guards up to £85,000 per bank, so your money is safe. Open the account. Move your savings across. That is it. You did not work overtime. You did not take a risk. You just told your money to sit somewhere better. Let me show you what that does over time. Say you have £5,000. At 0.1%, you earn £5 a year. At 5%, you earn £250 a year. Same $5,000. The difference is £245 for 10 minutes of clicking. Do that every year, and the gap compounds because next year you earn interest on the interest too. A few quiet years of this, and you have a free holiday, paid for by a tab you almost never open. Here is a warning so you do not get caught. Banks love a teaser rate. They offer a juicy number for 12 months, then quietly drop it once you stop looking. So put a reminder in your phone for a year from now. When it pings, check your rate again. If it has dropped, move again. Loyalty to a bank is a one-way street. They are not loyal to you, so do not be loyal to them. Treat your savings like a parking space. When a better spot opens up, you move the car. One more thing people get wrong. They wait until they have a big pile before they bother. Do not wait. The habit matters more than the amount. If you move 200 pounds today, you learn the whole process while the stakes are tiny. Then when you do have thousands, the move is muscle memory and you lose nothing to laziness. Small reps now, big payoff later. So let us bring it home. Your bank is quietly paying you a fraction of what it could, and it relies on you never asking. The fix is not clever investing. It is moving sleeping cash from a rubbish account to a good one and checking again in a year. Same money, same safety, 5 times the return. Today, open your banking app and look at one number, your savings rate. If it starts with a 0 point something, you already know what to do. If this saved you £1, imagine what one click could save you. Subscribe to Penny Drawn, and we will keep turning the boring stuff into easy money.